anybody could be in this business. If you just put one foot in front of the other, buy a book, go to a seminar, nobody's going to have 100% of the information, but you'll figure it out if you keep on swinging.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henschel. Good day, everyone. Welcome back to The Path to Wealth. I'm your host, Hannes Henschel. In this episode, we welcome Forrest Corral, a seasoned professional with 25 years of experience in optimizing financial outcomes and strategic investments. Forrest is the principal at Praxis Capital, have been overseeing an impressive portfolio of over 100,000 multifamily units. We'll explore his expertise in deal structuring, investment analysis, and the program management, and delve into Praxis Capital vertical integration model. Join us as we gain valuable insights from Forrest's remarkable journey in real estate and discover strategies for success in optimizing financial outcomes. Welcome to the show, Forrest.
Thank you for having me.
Yeah, 100%. I mean, you earned it in so many ways. So why are you in real estate? Let's start there maybe. I'm always curious why people pursue what they're pursuing.
Well, I was 17. When I was 17, I had a girlfriend that whose parents lived at the beach, and they had a big house and big cars and big everything, and the father never really seemed to work. And when I was 17, I was working a summer job, and I was moving furniture, and it was very laborious work, let's just say. So every day after work, I drive about 45 minutes from work to the beach, and it wasn't quite as hot as it was in downtown LA. It was nice and cool, Pacific breezes and the ocean, and being at their house was like an oasis, so to speak. There was a point in time and they would take me on, a couple of trips, and just really were really just wonderful people to me. And probably to everybody else, but I just thought in my heart of hearts, as a teenager, I thought, I want to live like this. I want to live like these folks. One day I asked the father, Mr. Dooley, what he did for a living. And so he drove me around this beach community here in Southern California, and he would point out to various apartment buildings and say that he built this apartment building, he built that apartment building, and I, at the time, I couldn't put two and two together, but he told me that I didn't need to go to college, and that I didn't need to, because I was going to college the very next year. He said all I needed to do was read a few books, go to some seminars, and and his father gave him some money to start his business. Yeah. And so the summer had ended, and I had went to college, and me and that young lady had broken off, and I started my college career like most people do at that age. And I went off to be an accounting major. I went off to work for a public accounting firm after college here in Southern California beach community. I worked on, and this accounting firm specialized in commercial real estate clients. And boy, I mean, it's a much longer story, but the first day I was there, one of the partners asked me to come and join his hockey team. He had an ice hockey team there, and he knew that I played ice hockey in college. And I went out. I was the best player, and so then there went my career. I got on all of his jobs. I went away from being a tax attorney. My plan was to be a tax attorney, and I went off to be working on the consulting side of this public accounting firm. Boy, then I got married, realized that my $40,000 a year salary in the mid-'90s wasn't going to be able to buy a $1 million home in Newport Beach, where I lived. And so I took Mr. Dooley's advice and bought a book, a real estate book, a course, and one of these late-night courses, these cheesy courses, and I read it cover to cover, and I wouldn't put it down. And then I bought another book about how to buy apartments, and then I would buy another one. And then, I was good at adding, subtracting, multiplying, dividing. So I just came up with a plan about how do I get enough net cash flow to support a $1 million home. That's kind of how I got my start.
I love the story. And it's almost like you had your own rich dad, but you didn't take him up on it.
And I did buy those books.
Eventually,
when they first went out, and they were fundamental to my thinking in those days.
Yeah, but it's so cool that you have like Mr. Dooley telling you, like, you don't have to go to college. all you have to do is educate yourself,
Right.
and become a sophisticated investor, and you can do this.
Yeah, I was the first in 3 generations. I was the first person in my family to go to college and graduate college there in Los Angeles,
Yeah.
and it just wasn't in our culture to do that. But I did. I went. It was a state school, so it was a very inexpensive school. It was the only school I probably could get in. Well, really could afford.
Yeah.
And in addition to all that, I went to a private all-boys Catholic school in Los Angeles, and my parents worked night and day, and I didn't have any brothers or sisters, and we didn't have any luxuries at all except for my ice hockey. And lo and behold, years later in college, I come to learn. Well, after college, I come to learn that my grandfather and my grandparents, both sets of grandparents, they had owned apartments, and in one set, they had owned these apartments, and they were free and clear. So that's how our luxuries were paid for. And when I mean luxuries, it was my private school, my college. I got a used car once in a while, and this is how the extra items, discretionary items in my life. This is how my family was able to pay for it, was the net cash flow from apartment buildings, and I didn't know that. I just thought, money grew on trees during elementary school and high school and college. So. But later on in life, when I finally got married, and the rubber in my life had to meet the road. I had to come up with something to buy $1 million home, and this was the way.
So what was that journey like? So once you put the plan in place, once you crunched the numbers, what did execution look like for you?
Yeah, so it's pretty simple. This business isn't easy. Isn't that difficult. If you look at my LinkedIn profile, it looks quite ominous. It's a 25, 30-year career and of real trials and tribulations and blessings. But honestly, I tell people today, and one of my business partners is a big. I like to say sometimes he's a big fish in a smaller pond, because our institutional pond, is a very big ocean, so to speak.
Yeah.
But I talk to lots of people who ask me questions about how I got started, et cetera, et cetera. And I always say, I was just in New York City, and I was at dinner and with a bunch of people, and they asked me the same question. And I said, anybody could do this business. Anybody. I just started off by buying a couple of books, going to a couple seminars, exactly what Mr. Dooley told me to do back when I was 17. And a lot of it just comes down to, you need to put one foot in front of the other, and you need to come up with some semblance of a plan, whether it's wholesaling homes or buying a single family home and flipping it. But to answer your question more specifically, I built a plan that said that I needed to buy single family homes and apartments. And I just started asking people for the down payment. And I kept on asking until somebody, said yes. And so my career started off with buying 5 single family homes in a city in Central California called Bakersfield. The average home back then was, $75,000 to $125,000, and I was able to get almost $1,000 in rent. So, doing the little math, it worked out, and I figured that, and I asked for the down payment from an investor, and I asked for the signatory on the loan that they would do, and my contribution to this endeavor was to find the foreclosure, to take over the foreclosure, to transition the foreclosure, to lease out the foreclosure, and then to monitor it. And our plan, in summary, was just to hold it for 20 years. And then in 20 years, we could, I did the math, and I said, well, this is how I'm going to pay for the kids' college, is I'm going to refi in 10, 20 years, and we're going to split the refi proceeds. And this is how my kids go to, a private school, a school that I never got to go to. And that's pretty much how I started. I kept on asking until somebody wrote me a check.
See, you just mentioned 2 things that I think disqualify your first statement, which is you said anybody can do it. Because you're thinking in decades, and you said you kept asking till somebody said yes. Majority of people aren't willing to do those things.
Correct.
Think in decades and actually go to so many doors or so many people to say no, and face that rejection over and over again till somebody says yes.
Right. Well, you see this face, and it was probably a lot skinnier in college, certainly on a smaller surfboard back in college. But I wrote a smaller surfboard in college, but you just need to keep on asking. It's a law of large averages, and I didn't learn that. I didn't know that when I started asking. I
Yeah.
was just too stupid enough to know that asking too many times would eventually lead me to a yes. I mean, I didn't know any of that, but you just do it until somebody says, if you could, Michael Jordan said, I failed my way to the top,
Yeah.
meaning, said another way, he kept on shooting free throws until he started making them. And I think
Yeah.
that's like in any of our businesses, whether it's buying apartments or buying single family homes or going to work every single day or trying to figure out how to try to get to oxygen in a capsule when you can't. I mean, you just got to keep it, you got to keep swinging. You have to keep swinging.
Yeah, 100%. And Michael Jordan keeps referring to how many game-winning shots he missed. And it's like, I missed all these shots, and that's why I won. Because it's like it's true, and it's actually the stuff that gets forgotten faster too. Like, if you look at the people that eventually went on to build companies like PayPal, some of the co-founders, they had like 4 or 5 failures before that. Like the
Right.
first 2 companies didn't have any revenue, never even turned a positive cash flow. Then maybe the third and fourth, maybe they had some cash flow, but it also didn't really turn out to anything. And then maybe the 5th swing was like PayPal.
Well, you learn by doing, and
Yeah.
to that point, I was probably on my 5th home in the mid 90s. I was there, I was painting the kitchen, and I noticed that my neighbor at this new home had a sign on his yard, a for sale sign. And then I saw this, what looked like the gardener walking in and out of the side of this house. And I went up to him, this short Mexican fellow with a cowboy hat and cowboy boots, and it was dirty. And I figured he was the guy that was doing the landscaping. And so I asked him, I said that, asked him how much he charged. And he said, well, I'm the homeowner, not the landscape guy. And I said, well, I'm sorry, but, and I said, just to make conversation, I said, Armando or whatever, you're selling your home. And he says, yeah, I'm selling one of my homes. This is one of my homes. I said, I thought I was all prideful at the time with 5 homes. I thought I was, some big deal. And and I asked him, I said, Armando, how many homes do you have? And he said, I have over 50 homes. And this was a man that could barely speak English. And it was at that moment I thought, if he could do this, anybody could do this. And what I've come to learn in life, in making a lot of money, losing a lot of money, making a lot of money again, is that there are no geniuses, just market cycles. And so if you hit the market cycle at the right time, then you will succeed. So,
but I would say that Armando probably has qualities that, again, not everybody has. Like you have to do it. You have to the guts to sign on something that is uncertain is something that the majority of people is not able to digest. Right. And the funny thing is, I think society and outcomes have been becoming more and more predictable. It's never been more predictable that we will all eat tomorrow. Like food security, housing security, all of those things. I think they're more established than they've been for many generations before us. But the human brain seems to be such that only a few people think that investing is less risky, than going the safe way. For example, I'm from Germany. My German friends think that I'm a massive risk taker by investing in real estate, while they think they're going down the safe route by putting their money in fixed accounts. And I'm like, you're giving away all your dreams and future for some sense of security.
Right.
And I take very, I would say, measured risk. And I think the outcome is the actual safe version of it.
Right. Well, what I used to work after these 5 homes. I was an accountant at the time, and I was buying the homes part-time. That's one advice, is that the first bit of advice is you just have to put one foot in front of the other. If you want to get hit by the cash bus, you need to walk out in the middle of the street. And so you need to take the first step, and then the second one, and then the third one. And then second of all, after those 5 homes I worked for, it was a miracle that I got this job at a publicly traded home builder. And I worked for these guys who went to Harvard. They were buying apartments, and I was tasked with doing some due diligence for them for 3 months. And so I quit my day job. I worked for them, and I said I was going to buy homes, and worked these contract jobs for the rest of my life. I was married and I didn't have any kids, so I could take these risks. And so while I was there, I learned how to buy bigger apartments, which was no different than buying almost no difference than buying single family homes. I always say it's just more or less zeros, more or less zeros on the cost of, construction, the cost of maintenance, the cost of, the number of units, the purchase price, the debt, everything. It's just more or less zeros. The concepts are still the same, and the competition is a lot stiffer, so to speak, as you go up the price of the property. But I worked for this home builder. We bought thousands of units. These guys from Harvard, they left, and the CEO said, I stuck around, and the CEO said that he and I and another gentleman were going to build an apartment business. And so it was a miracle. It was just a miracle that they always say timing is everything. And it was, to me, it was a miracle. And those guys from Harvard are very good friends of mine to this day. They wanted me to go work for them. I stayed with this publicly traded home builder. I stayed there for 7 or 8 years. I became from nothing. I went to basically the assistant chief financial officer. And while I was there, I helped directly purchase almost 20,000 apartment units. It was me and 2 or 3 other guys that did all of that work. And I did everything. And in those days, I wanted to do everything. I wanted to learn. And I learned by just reading what was called, in those days, or same with these days, I would read offering memorandums, and I was good at Excel, and I recreated all of the investment models that were in the offering memorandum. And these days, they're a lot simpler than they were back then. Back then, that they used to put regression analysis and calculate IRR and cash on cash. And I would look at these numbers on the 2-dimensional paper, and I think, okay, well, I'll recreate the numbers. And then I would think, oh, this is how they're calculating IRR, or this is how they're calculating cap rate, or this is how they're calculating certain other metrics. So that's how I really learned this business. And then when we'd submit a deal to, believe it or not, Lehman Brothers, there was this Harvard analyst, he went to Yale, that would critique all of my work that I submitted. And on the first deal, it was a tower, 20-story tower in Long Beach, California. He would critique my submittal, and he would ask me all sorts of questions, and I would go get the answers. And I wasn't always right, but I narrowed, like shooting the free throw, I just kept on shooting until I got it right. And then the next deal, I knew that he would ask me these questions, so I would be better prepared when I submitted the second deal. So that's how I really learned this business, is just by doing. And while you're in something, you just need to figure it out. And it wasn't rocket science. It was just being at the right place at the right time, and it was all a blessing that I got the opportunity and that I didn't quit. And even when things got hard, you just can't quit. So.
Yeah. But you also, you appreciate numbers.
Yeah, absolutely.
You already were in accounting. So for you, that might have been like a flowful challenge. Like for somebody else, this might have been a very frustrating journey. It was not a number cruncher. So
I always say I'm not the words person. I'm the numbers person. But the words person, we would just send, something out to our attorney. We had an attorney for everything, for loan docs, for purchase and sale, for eventually not for letters of intent, but for title. You have attorneys for all of this when you're buying a $50 million asset. So I would learn by listening to them, or them critiquing, the words that were in operating agreements or title reports. So I learned on the backs of us paying attorneys or counsels for every deal. That's how I learned. And
I think that's the beauty of having additional zeros as deals, because it allows you to have the scale where you have a professional in each seat for the deal.
Right. Yeah, early on when you're just buying a single family home, you're just like, you don't know what the hell is going on. You're just hoping that you don't do something that's catastrophic. So you can lean on title people, the brokers, lean on friends. There's a great verse in in Proverbs, it's called the spirit of it's in the multitude of counselors there's wisdom. So in other words, if you just keep on asking enough people, you'll figure it out. You'll triangulate what you should do.
Yeah, I think that's something that rings true for me. Like whenever I try to do something different on you, I want to hear like minimum 3 opinions,
Right.
better 5, and then you can somewhat figure out where do I need to head with this, and then get more opinions on top of that. And by opinions, I really mean qualified, sophisticated advice, not just like, someone down the street.
Right. Yeah, the funny thing is, and this is really just a boast, but some years ago, before COVID, I was going to go get my MBA, and I got into an Ivy League school, and I just hated it. I hated trying to learn about marketing and management, stuff that is probably applicable, but right at that second or the next 5 years wasn't going to be applicable. We have a thesis in this business, which is you buy enough units, you bundle them together, and then you go public. So said another way, you buy 5,000 apartment units and then you UPREIT is kind of like the term. And so I thought, well, I need to prepare myself for that moment. I had done it once, but I was kind of lost in what the heck was going on. So I thought, well, I'll go get my MBA and before COVID, and I hated it, and I wasn't learning what I wanted. So I found another program at another Ivy League school, and after COVID. And it's just an awesome program centered in commercial real estate. Yeah. And I was learning stuff there. I was learning the technical words that I didn't know, but that I had been doing all of these years.
Yeah.
And so it's been an amazing journey to go to an Ivy League school and concentrating in commercial real estate. But in looking back at all of this, I'm really just doing it just because I could write the check and I could make the time because I have enough people that I could delegate my entire job under me to, and I can do it now. But you don't need to do it. You don't need to. All you do, I go back to what Mr. Dooley said. Anybody could be in this business. If you just put one foot in front of the other, buy a book, go to a seminar. Nobody's going to have 100% of the information, but you'll figure it out if you keep on swinging.
So then why did you want to send your kids to private school?
Why did I?
Yeah, because you did mention that your plan was, part of it was like get the kids into private school, but it kind of goes against the advice that Mr. Dooley gave and maybe your life experience now.
Well, you have to understand that my wife comes from a family and a community who, if you didn't go to private school, if you didn't go to an Ivy League school, you were kind of looked down on. So, and my life growing up was just the opposite. So there's a family line that I just want to pass on, and when I pass on, and I want my family to know that, that I did what I did, and one of the things is going to Harvard, and one of the other things is that my kids went to grad school, and their kids went to grad school. And so it's not a requirement. It's a luxury that because I've been blessed so much that I can do, kind of like buying an electric Porsche. I can be part of this ESG sustainability community. 95% of the people cannot, but I can, so I just do. I've been blessed, and now I'm part of that. So I would say it's along the same vein.
Yeah, I appreciate the take you have on that you keep saying that you're blessed, but I also see that you've been your own blessing, the work ethic.
I definitely, a lot of us in Christendom like to just say that it's kind of, you cast your, you present your prayers and you just hope for the best. Well, that's a big part of it, but you do make your own luck.
Yeah.
You do need to get out of bed.
I've just read a study around luck. And basically, if you condense it down, it's that the more you put yourself in the position to be lucky, you get lucky. Which is basically having the work ethic, being a pleasant fellow. Attitude is a large part of it, and just putting yourself out there. And I think that's something that I've seen like between the lines with everything you shared so far, it's seen the people that I see succeeding are the people that are grateful in the first place, but they're also putting the work behind it. And I would say it's not just visualizing success; it's actually putting in the work ethic and getting up in the morning
Right. You're going to fail.
Yeah,
You're going, not you, but people are going, we're going to
I
fail
fail.
at things. You just need to get up and keep swinging. You need to keep on getting up. That's
Yeah.
really, I worked for a billionaire here in Southern California. And one of the stories that I loved hearing him say, which I only heard him say it once, but I've heard this story several times, which was he went to go buy a car, help buy a car for his niece, and the young man, the salesman, who was new to this country, and he knew who this billionaire was, and he says, "Oh, Mr. Billionaire, I know who you are. I know what you've done. Tell me in one word what the secret of success is." The story goes that this billionaire says, "Geez, I could be here all day talking about how to be successful, and for weeks, but this kid wants one word." And so this is a true story. The billionaire says, "If you are committed, you'll be successful. If you are committed, you'll be successful." So doesn't mean you won't fail. Just means that if you're committed, you'll start making free throws. You will buy a single family home. You will have a child. You will, run a mile or a marathon. So you just need to be committed.
Yeah, and commitment also means you get back up, you do what is needed. If something doesn't work out, you find another way.
Right. And that's what's so wonderful, especially about this country, is that you could be anybody. There are social issues and glass ceilings, so to speak, but this is a country you could do almost anything you want. And you see a fair amount of immigrants, becoming, in one generation they're in Congress, or they're in the city council. And there are difficulties in this country, like any country, because we're all humans, but it is a wonderful place if you're committed and you get up when you're knocked down and you just keep on going.
Yeah, I agree. And I think immigrants show that sometimes even more, because they get the difference. There's entire ethnic groups here that are, if you kind of separate them, that in like first generation became significantly richer because they see the opportunity and they have a different kind of attitude and work ethic towards it, and they kind of take it to another level.
Yeah, my parents were in that kind of second generation Mexicans in Southern California who it was the 60s. It was Vietnam. It was easy to be distracted and not entrepreneurial like my grandparents. But my generation, me specifically, when I met Mr. Dooley, and I saw how he lived, I said, this is how I wanted to live.
Which I think is also important, because for me, like, I don't really remember having a Mr. Dooley in my childhood, it came from like overall the kind of minds I was exposed to, or maybe also partly what I was open to was very middle class thinking, work hard, work a lot. And it like, I don't really remember, besides some few individuals, which in hindsight, I'm like, maybe I should have talked to them. But the majority of people that were around me had a very middle class line of thought. And I never had that Mr. Dooley moment where I'm like, oh, this is a possibility. That came a lot later when I was already in the United States.
You do need somebody to say it is possible. It is possible.
And I think that's more a mental thing we have to break through, because see, where I came from, rich people were like a different breed of people. It's like, hey, no, those people are, I don't know, they're on TV or they live in the cities or they do this. There was like almost nobody in my circle who was like, no, you can also do that if you elect yourself, if you have a commitment. Like it wasn't
nobody
part
in
of
my
the
circle.
language.
Yeah, nobody in my circle either. Because they didn't know. My parents didn't know why I should go to college. It was just go to college. They didn't know why. They didn't go to college.
That's the thing I see, that people that haven't been to college, they think that the golden path is college. I've seen that quite a bunch, especially with
It's not.
immigrants, where we're like, hey, we haven't done that. We come from hard work and labor. We want better for them. It seems that people that go to college have a better outcome and they more sorted, maybe because they get set up for six-figure incomes. But maybe that's not truly the path. Like Mr. Julie kind of knew better already.
Right. Again, a lot of it. You make your own luck,
Yeah.
and you make your own luck when you read books and you focus on positive things. There's another lots of great verses, but there's a great verse in Corinthians, which is in the New Testament, that says the spirit of it's like, focus your mind on what's good, what's true, what's honorable, it's like, if you focus yourself on the opposite, the negative things, you'll be negative. Your glass will be half empty.
Yeah.
You need to have hey, I could fill this glass up if I just keep on getting out of bed, if I keep on trying, listen, every day is a struggle. Even in success, it's a struggle. I have business partners. Sometimes there's yelling. Sometimes there's problems. I mean, if this business was fun, it wouldn't be called business. It would be called fun. And
It would be a
it
hobby,
is
right?
fun to me, but what I'm trying to illustrate is there are still every day there are problems that come up and you just need to solve them.
Yeah.
It's not rainbows and fairy tales all the time.
Well, problems are also just situations. And then the question is,
Right.
how do we approach them? If we can make them psychologically a problem in our head, or we look at it as this is the situation, whatever. We have a freeze on the property, or we have something when a fire on the property. This is something we have to deal with. And there's
Right.
people that expect us to deliver a solution right now.
Just some notable problems. I'm glad you brought up the fire. I mean, we've had several fires. We've had a property where there was a death, a shooting death. We've had a property that somebody firebombed the leasing office.
What? With like a Molotov
During a
cocktail
sale.
or something?
Yeah, during a sale, they lit the leasing office on fire during a sale.
Why?
Nobody knows. They weren't caught, but they were probably just upset over a rental increase or something. I don't know. But you just get over it. We sold that property, and I don't know. I think we sold it for $60 million, and I'm friends with the owner. I think we were in Oregon golfing together with a bunch of other of my competitors, and you just get through things. You just do.
So, I mean, I guess if you have a good relationship, buyer-seller relationship, that's like, okay, this happened, we'll fix it.
Well, it wasn't good then, and I think we're all a little salty because we don't get 100% of what we want.
Yeah.
But like I told them there, when it came down to the short hairs, I'm like, we have all too much time into this deal. We'll bend a little bit if you bend a little bit, but if I were on the other side of that table, I said I'd buy this property. So, what the thing of it is, when there's so many zeros that are involved, and your pocketbook is affected by transactions, people get a little weird. Then the more the zeros, the bigger the weirdness. Sometimes over, the smallest of things. I'm telling you, it happens all the time. It's never perfect.
I think money triggers certain things within ourselves. There's so much that we wrap up around the meaning of money for ourselves, the meaning that comes culturally with it, the family history with money, our own history with money, and it's not a healthy relationship for everybody. So, the bigger the deal size, maybe that's what brings out the weirdness, because they feel like
it's money. Money isn't the root of all evil. It's the love of money that's the root of all evil. So to me, the money is just like it's like a stoplight, or it's how many miles are on my car, or this car or that car, or how much gas is in the tank. It's a way we measure success or the lack of it. And so it doesn't mean that if you don't have a lot of money or some money or any money today, doesn't mean you can't be successful. Anybody could be successful. So
yeah, I agree. I mean, I've seen extremely wealthy people that look like they're on top of the success metrics by maybe American standards, but to me they look like largely unsuccessful because they're extremely unfulfilled. They don't have loving families, So that's why this podcast is literally called The Path to Wealth like well-being, because it's beyond the metrics. It's like what's the point of having a lot of zeros in an accounting metric if we don't feel internally fulfilled and connected?
Right. You can't take it with you. You can't take anything with you. You just live your dash. On your headstone, if you get one, there's the day you were born and the day you died, and in between there's this dash. And that's what we need to live. We need to love our neighbor and love our, as ourself. And we just need to help people. And so I don't always want to help people when somebody cuts me off, but we need to do our very best.
It's so funny. Imagine people would start adding their final bank balance on this tombstone.
It's nothing. I tell my wife, I'm like, you could have it, take it all. When I'm dead, I will be gone. I won't be here, and I won't even care.
Just to change gears a little bit, where do you see opportunity right now? Given you've been in the market long enough, you've been through cycles long enough. You've said it that there is no geniuses. There's only people who kind of see the cycles. Where do you think we are in the cycle? Where do you see opportunity?
My newly acquired education over the years would tell me that there are 4 phases to the real estate cycle. And there's phase 1 where you come from recovery. There's phase 2 that is the growth phase, and then there's phase 3, which is if you're drawing a bell curve in your head, there are 4 quadrants over the bell curve, and the third one is kind of where we're at, and they like to call it hypersupply, but it's really where rents start to decelerate. And so when rents start to decelerate, which they are, you move from one phase to the other phase. And when the rents decelerate low enough below the long-term average, you definitely jump into the next phase, up or down. And but this business is about it, where we're at in the United States. It's about states that we want to be in, which I like to say we only invest in red states as the first filter. The second filter is we only invest in multifamily. We only invest in multifamily that's a certain age and newer. We only invest in multifamily that in red states that's a certain age and newer, and that has a minimum amount of units, like 150 units and larger. So that's like the first pass, the first filter. When alcohol is being distilled, it goes through this filtering or distillation process. So that is the first level of filtering. Like we would never look at an office building, even if it was to be converted to multifamily. We're not into that. We're not buying student housing because we don't know how to manage student housing. We're not buying assisted living or affordable housing because that's not in our thesis. We buy market rate multifamily located in red states with a minimum of 150 units that was built in 1990s and newer. Yep. And with that, every deal that's brought to me is really sent through another layer of distillation, which I call traps, or we call traps. What's the crime? What's the household income? What are the school ratings? What is the beta or the rental forecast and occupancy forecast? These are the next level. So that's why when a broker will come to me and say, what's your buy box? Well, my initial buy box is, multifamily, red states, 1990s newer, minimum 150 units. But beyond that, this business within that buy box or location, that target markets, it's a street by street battle, meaning 2 streets over could be a lot better or a lot worse than the street that you're looking at right that second. So that's why you need to look to see where the crime is, what the household income is, down to the census tract. And if folks don't know what the census tract is, it's not really definable, except for the census tract could be as small as just the property, or it could be within a couple of blocks. That could be the census tract. So we look at the incomes down to the census tract because we want to know that the household incomes for that census tract will be able to support our new rents.
Yeah.
Let's see. So to answer your question, every deal has to pass through those levels of filtering before we will even look at anything. We usually say that part of our thesis is a good alpha and beta strategy. Alpha is what's called on Wall Street. A lot of people say alpha, chasing alpha or creating alpha. And alpha is just said another way is doing a value add strategy where you throw a lot of CapEx to move the rents. That's your alpha strategy in summary. The beta part of this is the future rental forecast, which is if you just go to bed at night, somebody who's a lot smarter than I came up with rental forecasting numbers. So the beta is a good tailwind. Above average beta is a good tailwind to your alpha strategy. So those are the initial filters of every property that we chase. Right now, where we're at in the real estate cycle, which is definitely phase 3, headed to phase 4, we are buying at super low leverage with long-term debt. That's the answer to your question when you ask me what are the opportunities what we're looking at. One, we're buying through the cycle, where we're at in the cycle. But we're buying different, which is it's got to be lower leverage, like south of 50%, and the term on the debt's got to be longer than 7 years. Because it's about riding out the trough or the downswing and the trough. Because everybody always says in real estate, I should have bought there 20 years ago. I should have bought there 10 years ago. Everybody says that. Well, this is the strategy about how you get through a down market and get through a trough and come out the other side. I'm telling you, these properties that we buy with low leverage, long-term debt in solid markets, the ones that I kind of illustrated earlier, or the type of market, is that with good fund, it's really just good fundamentals and drivers, which are, employment, population growth are really the two biggest drivers in any market. So yeah, we're buying, to the answer to your question, we're buying through the cycle.
Yeah, those two drivers are driven by policy to some degree.
Yeah, to some degree it is. That's why we're only in red states. I mean, I live in California. I love California. There's things about California I don't like, but I don't complain about them. You just pay the taxes and you deal with the politics. I mean, listen, people that live outside of California always complain about California, rightfully so, by the way. But that's generally, those are people who never lived at the beach. When you live at the beach, you look at things a little differently. And so, we're not, one day in the next 2 or 3 years, we won't be full-time California residents because there's a lot of wonderful places in the South and in the North and in the Caribbeans and, in Europe, these are wonderful places. We won't be full-time residents in California as soon as our third child leaves high school.
Yeah.
But legislative headways in blue states are our biggest, is like Godzilla coming to your city. Legislative headways, eviction moratoriums, foreclosure moratoriums, rent control. These are all Godzillas that will come to a city near you if you live in a more liberal city. And generally, those are categorized as blue states in the United States. It's not that they're bad. It's not that those are things in and of themselves have good merit, but just not from us and our capital. We will go be in states that are more free, like Florida and Texas and Arizona and Alabama and Carolinas. We always say that our target markets are in the Mona Lisa smile.
Yeah. See, I think if you look at the landscapes of different systems in the world and you look at what really brought prosperity to countries, I would argue that you find more positive outcomes for overall society where wealth and prosperity was created when there was slightly less involvement by the government and it didn't try to overregulate everything, and I think what we're seeing, it's never been a central kind of decision maker that actually brought the best for the country. Like if you try to centrally plan something, for example, like in Eastern Germany, and that doesn't bring the majority of people actual prosperity where they can have the kind of goods and services that they want.
Right.
So
Right.
you need to have a healthy economy that has guardrails, so that everybody is taken care of.
Right.
I agree that people that actually need help should have help. But I think people also need to have an incentive to go out and work and do the good work and participate. And one of the reasons I left Germany is because I felt like I don't earn enough of the economic upside of my effort, which is why I am in the United States right now, which is why I'm not building a business in Germany. So they are actually losing intelligent people to other countries. And there's a bunch of Germans who left Germany for that reason. And there's other countries that have a negative migration pattern of folks that are willing to do something. And I think the United States attracts those people, like the Elon Musks of the world. They want to operate here. But I think it's a fine line.
We want to, listen, I love my relationship with the Lord comes first, my family comes second, my business comes third, and whatever time is left in the 24 hours a day fits in, which is not a lot. But I don't, the one thing I don't like to do is complain. And you got to vote, and you got to be helpful, love your neighbor. You gotta vote. You gotta love your neighbor, and you gotta get out of bed, and and you gotta do it in a place that's gonna allow you to live free. And in some states in the United States, that's easier said than done, or easier accomplished than other states. And so again, I love this state. I love where I live in Southern California, but I won't be a full-time resident in the next couple of years.
Yeah.
Yeah.
I hear you. It's the same sentiment that I have about New York.
The Germans are a wonderful people, a smart people. It's a wonderful place, but like I say about California, I'd rather do business in other states with less legislative or that are less restricted, and more free.
Yeah, we were just looking at a portfolio in like northeast in Vermont. And for the cash flows, they are pretty healthy right now compared to other states. But then when I kind of checked off the same metrics that you're looking at, I was like, okay, it's a very heavy blue state. It's Bernie Sanders state in some regards. And then it doesn't have the economies of scale. It doesn't, like, if you look at the net migration, it's not there. So there's different drivers there where I'm like, who's going to buy this from us a couple of years from now? Like, I think the seller right now is happy that he found a group that is looking at taking 200 units from him that are fractured. Like those 200 units are not the way you will find them in Texas or in the Carolinas or somewhere. You will find them over different towns, small towns in smaller properties. So you don't have the same scales of efficiency.
Yeah, one of my business partners, Brian Burke, he likes to say, I wish I could take credit for this, but he likes to say there are some markets that are easy to get into, but they're just hard to get out of.
Yeah.
And you either buy for cash flow or appreciation. And, a lot of times we're looking for both. And so to us, that's more accomplishable in a red state just for these potential legislative headwinds.
Yeah, I mean, it sounds like it's not for political reason, but on a macro level, it kind of is.
Yeah, we do. We track. We're very data driven, like a lot of you and your listeners are. We track 1,152 submarkets in the continental United States, and the data changes every quarter.
Yeah,
and if you subtotal or if you sort and subtotal these submarkets based on their highest beta, which said another way, the highest 3 and 5 year rental forecast markets. There are blue submarkets mixed within the top 10.
Yes, they are.
Top 10 markets. But we already know from past experience that at any moment, somebody could vote in rent control or moratoriums, and it's just less likely in a red state. That's it.
Yeah.
It's that easy.
Yeah.
So.
Well, Forrest, this has been super insightful. I want to be respectful of your time. Where can people connect with you, find out more about what you're doing in the space, or, potentially reach out to you?
You could find me on LinkedIn. My name's got 2 R's in my first name, 2 R's in my last name. Just send me a message. I usually accept everybody. And then I usually respond to people a couple times a week. And if you really, I give people 15 minutes sometimes, weeks out in advance, just if they need help with something. I mean, I don't have a business that needs more people bothering or, asking me questions, but it's just part of who I am. So I have a heart for people who want to get into this business because, more people in this business eventually is better.
Yeah. You're the next Mr. Julie.
Good stuff. Thank you for having me.
Yeah. Thank you so much for your time. This has been quite insightful. Appreciate it.
Good stuff.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.